I work for Bank of America. I am a senior operations manager with Bank of America, and I have been with that company for 18 years. Today's actually my 18th anniversary. So, yay, happy anniversary to me.
Mhm.
And so I'm so glad, I'm so thrilled that you all are here today. And this really shows and speaks to your knowledge and your understanding that it's really important to learn how to manage your money now in order to build a solid foundation for the future. So, just really quickly, a bit of trivia. So, when 5,000 be- people between 18 and 24 years old were asked, what high school level course would benefit your life the most? 50% of those said money management. And this is over science, math, and social studies. So I thought that was pretty interesting that young people your age are so happy or are so curious to find out more about money management. So I am just so thrilled to be here and to be part of that journey with you. Um, and it's not just young people, right, that wants guidance about money matters. In banking, we see people every day who really need that basics in order to understand how their money works and what they need to do in order to make sure that they balance their finances every month. So 3/4 of American adults have said that they would like to get more basic money matters help as well too. So you guys are not alone. Managing money is a skill we all can learn. And like everything with knowledge, you have to practice it. And in order for you to do really well at it. And so when we leave today, knowing some of the basic steps of how to take you today and through your next steps in your future of how to manage your money better will guide you throughout your financial lives. So as we go through, I want to go just touch on what we will learn a little bit today. So we're going to go through some banking basics, and I would love if before we get started on any of this, if there's anything of interest in finances or money management anyone would like to find out, I'd love for you guys to start putting the questions on there on the chat or in the Q&A. So this way we could address those and make sure everyone one gets something that they're interested in from this webinar. And I see that um, Angeline would like to find out about investment and student loans, so we're definitely going to talk about that. So thank you for that great question. And so when we start with banking basics, and we think about some of the benefits you get from your bank accounts, also how bank works and how to choose the right bank for you. We'll also review what type of accounts that are available and then what to look for when you're selecting one of the different many a times type of accounts we have. There are multiple ways that you can pay for things like cash. Obviously, we're all familiar with that one. Debit cards, credit cards, and we'll talk about the difference between both as well. And then we have digital wallets. I know a lot of you young folks today really enjoy technology. And so we'll talk a little bit about that and how technology help you not just with ways to pay, but also protecting your finances. And again, we talked about credit card before. So we'll talk a lot about how to make the most of your money, making income and like your expenses meet. And I see Peter has a question about what percentage of student loan should be invested, and if any at all, in your retirement. So we'll definitely get those as well. So one of the things we also want to cover is your credit. So, if time allows, we'll talk a lot about how to establish credit and how to use it wisely, but also how to protect your financial information, which is critical. And we'll use as lot of example from real life as possible to make sure that you guys get the most of our experiences and our testimonies as well. So let's just dive right in. One of the things I see here that Tanya would like to discuss is investing in stocks. Tanya will give you a basic overview of those. Unfortunately, I'm not an advisor or I'm not licensed to talk about stocks, so I could only talk to you about the basics of money management. which is all FDIC insured products and services. And we want to also make sure that we give you the right information. So it's not obviously my area of expertise, but we do have some type of investments in the banking field when we think about CDs and IRAs and savings account as well. So we'll talk a lot about that as well too. So let us get started and get into it. So I wanted to pose a question for you guys out there, and I'll give you a few minutes to answer. How many of you out there currently have a bank account? Just, just type it up there.
Annalyn looks like she has one.
Okay, Angela has an account. So Angela, let me ask you a question. What was the reason? What did you look for when you were deciding what type of accounts to have or what bank to go to? All right, I like it. So you're trying to get a savings account. I like that. What were some of the benefits you like? So I'm gonna, for the in the essence of times, I want to make sure we get through this, but please keep putting your answer up there for those of you when I think about it. What was important to you when you were looking to open the account and which bank to use? So a lot of people, when they look at accounts, besides your family, your finances are your second most important things that you think about, right? So safety and having your money where it could be protected is important. When you think about decision to take your money from out under your bed, a lot of people say they keep their money under the bed. Why would you take it out from there to give it to someone, to put it in someone else's hands? So you want to make sure safety is important. You don't have to worry if someone were to break into your home, or if there is a fire that wiped out all your cash. That stuff you can't get back. Most banks is insured by the Federal Deposit Insurance Corporation, or FDIC. And so checking and savings account and some other types of accounts like CDs, they're federally insured. And that's what I mentioned before, about making sure that we can only talk about products that are FDIC insured. And each of these are insured per depositor, not per account. So if an account has multiple people on the account, each person on the account is insured up to $250,000. And then Marie France said that she was looking into getting a checking account. And one of the things that was important to Keisha was that she don't like to be charged any fees for her account. Me too. And that's important, because when you think about putting your money somewhere where it's safe, you don't want to have to spend a lot of money to keep your money safe, right? So the other things, like you said, Angeline, your savings earns you money. And maybe that's why you were trying to get into a savings account, because the bank will pay you to deposit your money with them. And so the interest that you earn goes back into your account, but also the bank will use your money in order to make loans. And a lot of you were asking about loans and mortgages and things like that. That's where we're getting the money. And that also is where interest is charged. So we'll get more into that, but I want to keep moving in some of the ways that why we choose a bank and choosing to put our money in a bank account. It's for convenience as well, right? So when you need to pay your bills, you literally go online and you transfer the money from your account to pay your bills, and your direct deposit from your work goes into your account. So again, it's convenient for everyone. And also it also gives you that importance of being able through statements to track your transaction, how you're spending and how you're depositing. And also the most important thing I feel is having a banking relationship with the bank, and also these help you when it's time for you to get credit. I know a lot of you posted on here that you're interested in finding out more about credit, and we'll definitely talk a lot about that. But the bank work hard to make sure that they're attractive to clients like yourself, to want to do business with them, so that they can have money in their depository so they can have it available to lend for the credit. So as we move on to the next page on the interest rate piece, which we talked about for savings, when you open an account, Josh, we would move to the next, there we go. When you open a bank account, when you put your money in someone's hands, you get charged an interest. So when I think about how much the bank would pay on average for you to leave money in your in their depository. On average, the bank charge interest of you earn interest, I'm sorry, of about 2%, right? So if the bank pays you 2% interest and they charge 6% to make a loan to someone, that means that the bank is making 4% interest off of the money that you've deposited. So that's important information to know, because how much you put in and what interest rate you get will be super important for when you decide where you put your money. And also when it comes time to borrow or to get a loan, you want to get the lowest interest rate as possible so you're paying back less out of pocket. And the interest rate can be variable as well. It go up and down depending on how much money the bank has to lend. So if the bank has a huge reserve, their interest rate may not be as high. And a lot of times what's interesting is that whether it's something you earn or something you pay with interest, what affects your decision about how you manage your money throughout your financial life depends on the return for your money, as well as how much you have to pay back for those loans. So keep that in mind when we talk about the money that you pay out as opposed to the money that you're getting in, and how you make those balance every month. So when again you're deciding some of the key factors for why you would choose a bank, online and mobile banking is pretty important to me. And why is that important? It's important so I have access. So the location for the bank of the bank, where the online and mobile banking, ATM access, and of course, for people like yourselves, student offers. So we a lot of times banks have offers, especially for students, to give them benefits to open their first accounts with us, build that relationship. So this way you can, as you go forward in life, get your first car, your auto loan, your first home, credit card. We talked about credit. That's going to be important. So you want to know if there is a branch nearby. You also want to find out what type of access to online and mobile. So this way you have your banking at your fingertips, guys, 24/7. I just log onto my mobile and I could see everything that's happening onto my account. And then when you want to get ATM access to cash, where is the closest ATM? And then what are the types of accounts that banks provide? So if for yourself, young adults, for students, for me, it's important when I think about retirement and things like that. And I will tell you guys, it's never too early to start thinking about retirement. I personally wish I had started earlier. I want to, there was a question from Tanya that says, my older sister recently opened a checking account with Bank of America, and there is a monthly fee because she's not a student. Just advise her to go in and speak to one of the relationship managers, and they will flag her account as a student account. So this way she won't be charged any fees. So when it was open, that information probably wasn't captured on the system for there to be that waiver, for the fee to be waived on the account.
And
Um,
it also, Zorona says there also, in addition, it looks like Tanya said that she's not a student. So that same thing applies. She may, in fact, want to sit with the relationship manager
ah,
as well, and just have that account looked at and reviewed to make sure she's in the right one, to ensure that no fees would apply.
Absolutely. So, guys, before I move forward, that gentleman, that handsome young man that just spoke, that's Josh. He's my teammate. He's also a senior operations manager with Bank of America. And so he and I will be tag teaming to answer your questions, as well as discuss the different topics on basic banking. So, Josh, thank you for that. I did not see that not there. So, Tanya, definitely have her going and speak to one of the relationship managers, like Josh says, because there are many different ways to avoid fees on the account. So as we move forward, I want to talk about the difference between checking and saving. So when we look at the checking accounts, of course, these accounts offer you easy access to your funds, where you can withdraw cash from your account with your debit card or ATM card, use your card to pay for things directly from the account. You can also write checks. Honestly, though, I don't know if anyone who write checks these days. With technology, it's so easy not to have to keep up with paper. And so also you could do transfers online with your online and mobile. And then some checking accounts, some, not all, offers a minimum interest when you open an interest bearing checking account. So I know one of you mentioned something about you were, Marie France, you were interested in checking, not savings. What was, if you wouldn't mind, the reason why you wanted to do a checking and not a savings? And I'll look for your answer as I go along. The other thing I wanted to do is going back to banking. If I decide to open an account for in an American bank but move to an international country, will I have to pay other fees for my account? And again, Nelly, that would depend on the balances you keep. So you could also go online to bankofamerica.com, and there'll be a lot of different ways of how you would avoid fees as well, even if you're not in the United States. So that's a really good question. So as I keep going, the difference between a savings account as well is that these savings account is typically designed to help you for both short and long-term goals. And so when we think about saving for something, when it's a financial priority, most people think about retirement as long-term, or saving for a home is long-term. But if you're saving for vacation next year, hopefully we all can go on vacation this year or next year. When you think about savings short term, typically they offer higher interest rate than checking accounts when you think of a savings account. But the thing is, with savings account, the access is limited because it's designed to help you save. So there are a limited number of withdrawals and transfers would help keep you from withdrawing money often, and using this account as a substitute checking account and truly encourages you to save. And of course, you could also link your saving to your checking account to make sure that it's make transferring from the savings to the checking more simple. I like linking my checking to my savings account, that this way, in case that the funds are not in there, and if there's any unforeseen um, transaction that may come through the account, you protect your account from going overdrawn or in the negative. So that's something I feel that's really critical to avoid overdraft fees, which is part of the whole fee category that we talked about when we think about not having to pay fees and high interest rate. So what looks like a no fee or low cost account may actually be one that's best suited based on your needs. So some questions you want to ask yourself as you figure out what's the right type account for you. Are there any specials on the account or discounts for student, right? That's always important. I like to make sure that I take advantage of all the benefits that I can get. Is there a minimum balance to open the account? Do you also need a certain amount of money to keep in the account to avoid fees? And these are also ways that you can avoid fees in the account. Also, if there is a fee, what is the fee if I have to maintain, if I can't maintain a minimum balance? With some banks like Bank of America, one of the ways that you can avoid a fee as well is having direct deposit where you work. And so having a regular paycheck, a direct deposit into your account will definitely circumvent that as well too. The other thing with savings account is that it's limited in how many transactions you're allowed. So the federal government actually regulates this, and this is called Reg CC. And it only allows you a total of 6 withdrawals or transfers out of your account every statement cycle. So some banks will charge you a fee once you go over the 6 for everyone that you exceed the limit. So be mindful of that, because you want to make sure that if you need more access than the 6, you would want to convert that account into a checking and not have a savings at that point. And then you also want to find out, what if you would try to withdraw money that is on the account? We talked about overdraft fees, and this is really important to manage your money, to know how much money you have on the account, so then how much you can spend and also have access to, because once you go in the negative, that's another way bank makes money, by charging you an overdraft fee. So as we move forward and think about additional fees for, like, say, ordering checks or replacing your debit card, these are some of the things to keep in mind if you plan on writing checks as well. Some accounts do offer, free checks, things like that. So you want to make sure you do your homework if that's something that you want to take advantage of. So I want to pause here for a second on the ways to pay, because I think this is pretty critical when I think about how we pay and how we use, a debit versus credit card. I know that's a question a lot of my clients come into the bank and ask me about, especially young adults. Debit cards and credit cards are not the same thing. It's access to funds, but it's not the same. So cash, of course, can help you avoid any type of debt because you have the money, you pay for it, that's fine. The con to cash is that if it's stolen, it's gone for good. Debit card, the pros in that is that it comes directly from your account, so it's the same as cash, if you will, and there's also fraud protection. But the con is that if you spend more than you have and you don't keep track of your spending, there are the overdraft fees that we talked about. This one is my favorite, the digital wallet. Technology is my friend. So when we think about how simple and easy it is to load your cards into your cell phone and your online banking and just pay with your phone instead of having to carry around cash, credit, debit card, things like that. The convenience is important. But if you spend more than you have, again, there's that overdraft, right? So you want to keep that in mind. The biggest one here that I want to talk about is credit. So the pros is that it's safe, it's easy to build credit so that you can use for loans in the future. But keeping in mind that when you carry a balance month over month and you pay it off every month, it results in interest being charged on that balance you don't pay, unless some banks offer 0% for the first 12 to 15 months on purchases, where even if you carry a balance, you have that time period to pay it off before you start accruing any type of interest on it. So it could help you earn interest, but it could also make that where you have to pay interest on the balances that you carry. So when I think about all these different ways to pay, any questions do you guys have around that? Let me take a pause here to see if there's any. Um, yeah, I see Josh has answered some of your questions, so pretty good. So I'll keep checking back around those questions around ways to pay, and if we have more information, or we need more information on the debit part versus credit. So key takeaway as we wrap up this first section, guys, the key benefits of having the bank account. We talked about, the benefits of making sure you have the location, the type of access, learning how to manage your money is important. Talking about how banks work with interest, where you earn interest with the money you put into your savings or some interest bearing checking account, as well as the interest you pay, and why you would choose a bank account that's right for you. It really depends on what is important to you and what you're looking for. And then the ways to pay, how you would use and access your account, whether it's debit, credit, digital wallet, or cash. So there's a misconception out there that there's a misconception that to be good with money, you need to have a lot of it. And that's not necessarily true, because what you need to be good with money is the management of it, to make sure that if you want to build habits for a healthy financial future, it's not around how much money you have, guys, but it's how well you manage it by keeping track of how much I have, where could I get the best return for this money when I deposit it or keep it with a financial institution, what benefits I get back, and then how much interest I am going to earn on that. So when I think about all of those, please keep your questions coming, but I will pass it along to my friend Josh, who is going to talk a little bit more in detail about managing your money. So Josh, I'm going to pass it over to you.
Absolutely. Thanks so much, Zarona. And once again,
Mhm.
my name is Joshua Roberts. I'm a senior operations manager with Bank of America. I've been with Bank of America almost 7 years, and I've held the role as the financial center manager prior to me accepting this role. I'm really excited to be with you guys. Real quick, Zarona, if you could see, I saw that there were about 4 questions in the Q&A section, it looks like. Did we get to all 4 of those before I proceed with the next section?
I'm going to start going. You go for it.
Okay, perfect. Awesome. So we're going to move into managing the money that you have, right? And to Zerona's point, she mentioned it's not about how much money you have; it's all about how you manage the money that you're getting. So, as we move into the next section here, it's really important. First of all, regardless of how much money you make, where the money comes from, it's really important to know how much you're getting each month, right? And as you see here, it's a grid here that we utilize where you can kind of track what your income is from month to month, right? So seeing the different types of income, the allowances, any gifts that you may receive from friends or family, tips that you may receive if you're in like a service level job, or your standard wages that you would always have, based off of wherever you work. So it's really important to start finding a way to be able to map that out and really have that information at your fingertips, so you know exactly how much money you have each month, and you can rightly allocate where that money's going to go. And I think I shared with Grace, a tool that we have available and that's going to be sent out to you guys. She's going to put that in the chat there, as well as a link that you guys can click on, and it will take you directly to an editable tool where you'd be able to utilize this and really keep track of the money that you have coming in. So really, really important while you're tracking all of these things, it's really important to not overestimate, right, the money that you have coming in. A lot of times you can end up spending more money than you do have, and that's where you get into the overdraft piece that Zerona talked about, which in any situation when you're banking with the bank, the goal is to avoid having to utilize the overdraft feature of the financial institution that you're deciding to do business with, just because it's extremely costly. And a lot of times when you have those types of situations happen where there's fees involved, it's really, really hard to climb back out of those holes. So we want to make sure that we're accurately recording, utilizing the tool that Grace just put in, all of the income that we have coming in. So we can keep moving along here. The next one, I'll tell you guys a personal story about myself. When I first started working back when I was like 16 or 17, I remember I went and got my first job at a Quiznos Subs, and it was a sub place where you worked as either as a server or a person preparing sandwiches, things of that nature. And I remember about reading a paycheck. I did not have any type of understanding on how to read a paycheck and know what to expect when I first started my first job. So when I got the job, it told me how much I was going to be making per hour. And I immediately started to do the calculations in my head based off of how many hours I was on the schedule for. So, I mean, if he said, $8 or $10 an hour, I started doing that multiplication in my head, and I expected a certain dollar amount to come in after that 2-week time frame of me working at that job. And what crazy happened, I had a lot of deductions that came out when I got the paycheck. It was a way lot less than I expected it to be. And that was because of deductions. So how to read a paycheck, extremely important for you guys to know as we continue to move through the presentation. If you guys notice, the magnifying glass is right there on the deduction section of the paycheck. And that's where you really want to make sure that you are making yourself familiar with as you're looking at your paycheck. And as you can see, it has a federal income tax section, a state income tax section, Social Security, Medicare, and then health insurance, 401k, FSA, and commuter. Those are two different types of deductions. You have your mandatory deductions, and then you have your voluntary deductions. The mandatory deductions are the tax deductions, and the Social Security deductions, the deductions in the number 2 section there. Those are deductions that you cannot adjust. They're based off of a bunch of extenuating factors that, based off of your income, your tax bracket, if you will. All of that is tied into how much money is going to be taken out of your paycheck and goes to the federal government or your local state government, or towards Social Security when you get paid. And then you have those voluntary deductions, and you may have elected to pay for these things that are removed, such as health insurance, right? If you get sick and you want to have care that's a little bit less or cheaper than paying out of pocket, you have the health insurance coverage, or your 401k. And Zerona mentioned retirement and how important retirement is, and starting to put money away for retirement as well. That's a voluntary deduction. You don't have to do that, but we would encourage, right? If you have the opportunity to be able to put that money away for retirement or for a rainy day, it's another way for you to be able to save for your future. The next one is going to be a FSA, like a flexible spending account. Those are for like healthcare expenses that you may have and you may incur if you were going to the doctor or had to pay for a service. You have the option to be able to utilize your FSA to be able to do that as well. So the most important thing is, unlike me, I didn't check the net pay section. I expected the gross pay to come directly to me when I got paid. And in that situation, I should have been checking the net pay. And if you see number 4, net pay is the actual take-home pay that gets direct deposited into your account that you would have with the financial institution that you choose. And that's based off of after all of those deductions have been taken out. So remember, you start with the gross, the deductions in 2 and 3 come out, and then you end up with the net pay. So don't be like me and expect all of your gross pay to come to you, because you should have deductions coming out of your paycheck in some shape or form. Moving into knowing your expenses, it's just extremely important. And one thing I'll share with you is it's a surprising statistic that we had. Teens and folks in high school, things of that nature, spend the most amount of money on food. And that accounts for almost 24% of the spending that teens have. Out of the other categories like clothing, shoes, video games, electronics, some of you folks, if you would like to start in the chat, let us know exactly what you spend the most on. If you have, if you care to share, feel free to pop that in the chat for us. We would love to know some of those categories that you guys deem the most important, or where your money goes the most. That'll help us out a lot. And then you may not realize how much you're spending on that trip to Starbucks or that trip to McDonald's every week. And you may think you have enough expenses to cover all of those. But if you're not writing them down or keeping track, or keeping a record of what's happening, it's extremely important that you know where that's going. And you want to get in the habit of writing that down in terms of what you spend your money on. I see Bina put in at gas, one of the biggest expenses, right? You got to get from point A to point B. So, it's a cost that you have to incur. Nelly put in hobbies like music concerts and
I like that.
merchandise. I like that. I love to attend. Man, you got me thinking back pre-pandemic when we could attend music concerts. I love that. And again, depending upon what you deem important is where your money's going to go. So you really want to make sure that you have a notebook available, a pencil, or even our application, or an application like your phone. You can utilize whatever bank you choose to bank with. You can utilize that bank's application, and most of them have a spending feature, a budgeting feature built in there, where if hobbies such as music concerts or gas are important, you can put in exactly how much you think you're going to spend in a month's time on that money, or a week's time on that money. And you can quickly access that and keep track of it really, really, really easily. So moving forward, we're going to move into knowing your expenses, right? So we talked about exactly around some of what those expenses potentially could be, right? Nelly shared that it was hobbies, and Bina said it was gas. There's another link that we're going to share with you here inside the chat, where you'll be able to know exactly what your expenses are from month to month, right? And keep track of what those are, and be able to tally that up in addition to the income that you had coming in. So you know how much money that you're left off with at the end of the day. I see Grace just shared that in the chat. And that's an editable option that you guys can utilize, where you can plug in how much you're spending in cell phone, right? Entertainment, food, clothes, haircut, whatever the case may be. You'll be able to keep track of those things. So if you can compare those, right, the expenses, the income, to each other, you can find out what you're left with, and that's called your margin at the end of each month. Here. As we get into the next section, we're just going to talk about adjusting your habits. So if you start to put line of sight on what those expenses are and how much you're spending in those specific areas, you'll start to realize how much money you could potentially be saving, right? If you even cut down on some of those costs that you may be making, or those choices that you make on a day in, day out basis. So you see here on the screen, coffee and snack, $4 daily versus 3 times a week. If you did that, you would be able to save, if it was $4 for each of those times you went, you could save $8 weekly, or even up to $416 yearly on just a coffee and a snack. Or pizza and a movie. You see, if you do that 12 times weekly, if you were to cut that down to only 2 times per month, you could be saving $24 monthly, or $288 yearly. And I could use $288 extra, right? So you want to make sure that you're cutting down those expenses where need be, and looking at it from, maybe if you're doing it every week, maybe doing it twice a month, or maybe if you're doing it daily, maybe only doing it 2 or 3 times a week. You can easily cut down and save yourself money that way. If you look at some of the choices that you're making, and maybe just drop some of those things, maybe eliminate some of those things from your budget, or choose different options that are less cost effective, cheaper options that may be available to you. So we'll move on to the next section here. The next thing, as we look into that, is going to be looking more so around needs and wants, right? And realizing what are some needs that you have, right? Of course, gas, as was shared earlier, as one of those needs, right? You got to be able to get to where you need to get to. Savings, right? Savings is a need that all of us have. You want to be able to put money away for a rainy day. If you have, if you drive, if there's a car repair that needs to happen, cell phone damage, whatever the case may be, those things are needs, and you can't be able to do or take care of those needs if you don't have savings available. Of course, if you guys are students, right, when you guys move into the college realm, costs for books, tools that you need, clothes, things like that, all of those things are needs. But on the other side, you'll see that there's wants, right? And we talked about sometimes the hobbies, the concert tickets, right? Those potentially could be wants, where, again, if we maybe reduce the times that we indulge in those types of activities, maybe we can save some additional money, right? and look at budgeting a little bit differently. So it's always about balancing your needs and wants. Let's say you have about $20 from a job allowance, right, that you typically use to go to the movies with friends on the weekend. And suppose that you've been saving up for a bigger purchase like you really wanted, like the new iPhone or the new smartphone. But then you learn your favorite band is coming to town and the tickets cost about $60. What would you do? You got to take a hard look at your expenses. Sometimes the need is really just a want. You may think that, it's a need, something that you got to have, but it might just be a want. And maybe you can reduce the data on your cell phone plan, right? Everybody, there's Wi-Fi, public Wi-Fi available everywhere. You have different ways to look at your wants and adjust them to where they don't have to cost you as much as they may be costing you right now. We'll move into the next section here.
Hey, Josh.
Yes.
The Terrence has a question. What are some of the most common financial mistakes students make early that we can look out for?
Yeah. So one of the common mistakes, right, is spending more than what they have, right? Oftentimes we see that a lot in the financial centers, right? They come in and a lot of times the parent is walking in with the child and the damage is in some cases already been done. And things like subscriptions, that might be one of the major things, right? Subscriptions, the Xbox subscriptions, again, we live in a subscription-based society now. So many different things. You have all of these different streaming services and things that charge your account, $4 and $5 a month, and they don't seem like a big dollar amount, right? At the beginning, right? The monthly cost may be really, really low, but oftentimes tends to, Netflix. I see Miriam just put in Netflix in the chat. Another one, right? Where it's something that just comes out of sight, out of mind every single month. It comes out and you don't really think about having that money there sometimes, especially students with, the busy life that they have going to school, hanging out with friends, things of that nature. They see that money there one day and they spend it, but they forget about that subscription that's coming out the next day. And that may be tied to that debit card or it may be tied to the account number and routing number. And those types of transactions are the ones that hurt the most because in some cases, gym memberships as well as Ron, I saw that in some cases, those things come out and most banks, depending upon how that transaction is set up, have to pay those transactions even if you don't have the money there. And that's where that $35 fee comes into play. And a lot of times we're sitting back having conversations with parents around how can we, eliminate some of those subscriptions that may be available. So that would be one of the biggest ones I would say to look out for and keeping track, right, on those budgeting tools that we shared earlier, keeping track of those subscriptions and when they come out, the dates in which they come out, and making sure that you have traction on that. So that's one of the biggest ones. Any more questions, Arona, that popped up?
No more that I see.
Awesome. So the next section that we'll go through is just how to get started with savings, right? You might not bring in a lot of money, right? And cost adds up fast. So building your savings can seem like it's out of reach, but there are some tactics you can use to get started. And one of them would be, of course, looking at that income that we talked about before, utilizing that tool that we shared. And then in addition to that, starting to look at the expenses that you have. But here are some of the 4 tips. First, prioritize your future self. And that's one of the biggest things, even myself, Zarona, we have to make decisions about, right? When we're about to make a purchase decision, really want to think about, is this just a temporary fix or is this going to really help me in the long run, right? Really thinking about that before that purchase decision is made. Second, think 1% at a time. Resolve to put just 1% of your income into savings over the next month. So looking at that income, or if you had any space in between there, right? And can I put that money in a savings account? By doing so, you'll flip an important mental switch. You'll go from being a non-saver to a saver that fast. That's a key difference because it's much easier to ramp up your savings if you already formed a habit that's currently happening right now. And I heard some people talk about investments earlier, right? And that's extremely important. A lot of times it's really important that we get down strong savings habits first, all right, before looking into, investment vehicles and ways that you can invest the money. A lot of times folks will come in and they want to invest, but they haven't had strong savings habits first. And that's where we kind of like to start from a banking perspective. Third, making it automatic. If there's an option, right, where you can split your paycheck up and have a portion of it go directly into your savings account, even if it's a small amount, and you can check with your job's HR capability, you may have an option to split that up, or you can set up an automatic transfer between your checking and your savings account so that when your paycheck does come in or when you deposit money every 15th of every month or 18th of every month, whatever date you see fit, you can have that money go transfer directly into your savings account. And then the fourth one would just be going slow and steady, right? Slow and steady wins the race when it comes to savings. Again, habits are more important than the amount. If we can continuously put money away each month, we can start to build on that savings goal that you have, and reach those goals that you have for yourself. So, with that being said, we'll go with some key takeaways here. And the key takeaways again, one, knowing your income, knowing the expenses that you have, right? That'll determine whether or not you need to lower some of those expenses to get underneath your income so you can start saving. Adjusting those habits, looking at different ways that you can adjust your habits in terms of decisions that you make to add some room in your budget. Balance your wants versus your needs. Really think about those purchase decisions that you have. Find out if it's a want or it's a need. And then number five will be starting to save, starting to put money away. Each time you have money come into the account, how much money can I put away and live off of the rest? Extremely, extremely important. I see here, Alan put in, what percent of your paycheck would you consider to be the best to put into a savings account? Really, it would be around how much you can afford to do so. I say a good percentage, usually somewhere around 10%. So if you have $100 paycheck coming in, putting $10 away is a good start. But if you do that income section and you look at that expenses section and you see that you have a substantial amount of money left over, you might be able to go above 10%. It may be 15%, it could be 20%. It just depends on how much expenses you have. And if you can take a look at what those expenses are and lower those amounts so that you can build more money into savings and then put the money in the savings. And if you can leave it there without touching it until you have a big goal or something that you want to reach. So that's how I would answer that question. So with that, I will turn it over into smart credit moves and turn it back over to Zarona.
Awesome. Thanks, Josh. Josh, Ankit Kumar just posted a question on the Q&A a little while ago. So if you want to look at that, and I'll keep going with smart credit moves.
I don't know.
So I feel this is where we can add a lot of value to a lot of our students who at this stage in your financial lives, it's the best time to start building credit. But be mindful that credit could really hurt you if you don't use it wisely, or it could definitely help you to set you up for financial stability towards the future. So, where I grew up, I was born in the Caribbean in Trinidad, and everything was cash. We didn't have to have credit cards or build credit for anything. So, building credit or having a credit card was a new concept to me when I moved from the Caribbean to the United States. And so I learned really quickly that if I didn't really need it, don't keep putting it on that credit card because those balances grow so quickly. And when you carry those balance month over month, the interest is charged. So just to be mindful, credit cards, this is the best time to get it, but be mindful that you want to make sure that you would use it only if you need, wants versus need. Also that if you have the funds to pay it back when it times to make that payment every month. So what is credit? We talk a lot about credit. Credit is the ability to make a purchase for goods or services, and it's based on trust. You don't even make a payment, you just use your card, you purchase an item. But based on trust, that payment will be made in the future. And so a lot of banks use credit or to be able to determine your loan, your credit card, the interest rate you can command. So if used properly, credit card can help you reach personal and financial goals, like we talked about earlier, buying your first car or your home, paying for college. That's the next step. I know a lot of you ask about student loans. Credit also is an important factor when it comes to when you want to go rent an apartment or get insurance rates. That's the biggest one. So establishing good credit habits is really important early on because as soon as you guys step out into the real world, like I tell my 16-year-old son, you need to have some sort of really good financial management and habits already established so you can go out there and not make any of these costly mistakes that you have to end up paying for in the long run. And so when we think about credit, it allows you also the flexibility to either pay it off in full every month, pay it off over time by paying the minimum balance. And it's helpful to know that to finance large purchases, to use in case of an emergency when you don't have savings available. So I'm going to repeat that because I fumbled over my words there a little bit, and I feel it's important to repeat. So credit cards are important and helpful if you're looking to make a large purchase in the future, or if you need to use it in the case of an emergency and you don't have the funds available in your savings to use at that time. It is also important to remember that when you use your credit card and borrow money and you choose to pay it back gradually, there is that interest that you would pay unless you have that 0% interest for a certain period of time that some financial institution offer on credit cards as you're applying for the first time for that card. But if it's used unwisely, like I cautioned earlier, credit can leave you in unplanned debt and can hold you back from trying to accomplish the things you want to meet the expenses that you want. For example, if your credit is not good enough, you won't be able to purchase that car or that home. Or if you do, you will also end up paying a higher interest rate than if your credit was in a better position. So keep that in mind, that credit is definitely something you want to think about, but think about using it wisely. And any idea why a lender would trust you to pay back a loan and give you credit, like how that comes about? That's really based on your credit history. So when you look at um, what determines your credit history, it's a record of how you've made your payments to loans and credit cards in the past, and that history determines how high your credit score is. So think about your credit report or something like your report card. When you get really good grades, it tells people how well you've done in your academic year. So the same thing with credit, how well you use your credit tells people, and the score that you have tells people how well you've done in your finances. And so when you go to apply for a loan, the financial institution will pull your credit and determine what interest rate you get based on your credit score. This also is helpful, like I said, even for an apartment. Some jobs also look for a good credit history when you apply, when they do the background check. So keep that in mind as well. A bad credit health history, like we talked about, will result in higher interest rate, fees, and maybe even get denied altogether for what you're applying for, whether it's your apartment or your job, or that loan to purchase your first car or your first home. So your credit history and repayment is tracked through your credit report. And this is really also known as your credit worthiness, which is tracked by a number, like your credit score. They work together, but it's not the same thing. And I'm going to say that again. Your credit report is not the same thing as your credit score. Your credit report is a snapshot of how your financial life and how you've accessed it. And no, it's how you a snapshot of your financial lives, and it's accessed by who you are trying to get this credit from. So it could be your landlord or your employer or a lender you're looking for. And this history is of all the accounts and payments that you had in any type of credit product, which is a credit card, mortgage, a loan, student loans, something that's important right now. Also, your bankruptcy, the result of not managing your credit well. So all of that will be on your credit report. There are three major credit reporting bureaus. We have Experian, Equifax, and TransUnion. And the information collected from these credit bureaus are from companies that you do business with that reported to these credit bureaus, and that makes up your credit report. What questions you have about that, please go ahead and post it, because I know this is something that might be new to some of you, and you may have some more questions. So as I go into the credit report, the credit score. The credit score is actually the number based on what's on your credit score. It's how lenders will determine how reliable you are when you're repaying a loan. So their credit worthiness. And the score is basically to measure, like I said, how reliable you are, but also how much you will be qualified to borrow and how good you are in paying it back. So the better your score, the more likely you are to repay your obligations. So that tells the lender that the chances that you will pay them back is also better. And so you will be approved for a credit card or a loan with lower interest rate than normally is for someone with a higher interest rate. What's also important to know is how that score is combined, how it comes out, how the credit bureaus come up with that score. So what they do is that based on the information lenders submit to them month over month, 35% of that score is from your payment history. 30% of the score is from the amount that you owe. 15% is the length of your credit history, and 10% is based on the type of credit you use, as well as the type of 10% of your new credit. So when you think about not having a payment history, which is all of this is coming into play, so the type of history, the length of your history, the type of card, the amounts you owe, I know you guys are asking yourself, well, if I'm a student and I don't have credit right now, how can I get a credit history? How can I show the type of cards I currently use? How can I show how much I owe because I don't currently have a card? Well, at this point, you're going to have to start by building your credit. And to build a good credit score, you have to have a loan or have a card to get credit. So some banks offer different types of credit cards designed to help you establish credit, and those are called secured cards or also student cards. Because we understand that as a student, you don't already have history. So the limit that we apply, when you apply, these cards are approved for is pretty low. So the risk to the bank that you won't pay that back is very nominal. And what goes into play as well here is also what we talked about earlier, is establishing that relationship with a bank. So you already have a relationship established and they know how you are in managing your accounts as well. So a checking account won't necessarily help you build credit with the bureau, but it may help you get your first card with the bank you bank with, because you already have that strong history and good business practice with that bank already established. The secured card that I mentioned before are designed for people who want to establish credit, strengthen, or rebuild their credit. So the secured card works where you will secure the amount you want to borrow with a deposit that you will place in the bank. The depositing money is the account will give you how much that limit is on the card that you're applying for. So that's also known as the collateral for the card. Something lenders use, something the lenders gets to use should you default on the loan. So that money you keep as a collateral is what the bank will use if you don't pay back that credit card to pay the credit card. So it's a no-brainer, if you will, because if you owe $500 and your limit is $500 and you don't pay that back, we'll just take that money and pay that back. So it's a win-win for everyone. The bank has minimum risk and you also have the opportunity to build your credit. So keep in mind, please, that a secured card is very different from a prepaid card. A prepaid card allows you to load money month over month or as you use it into the card to spend later. Prepaid cards are great for people who needs access to Visa or MasterCard to make purchase, but prepaid cards does not establish credit. I'm going to say that one more time because a lot of people think that that's the case. Prepaid card does not allow you to establish credit, or it won't establish credit. The fourth option is if you have a parent or family member with good credit who's willing to make you an authorized user on their account, this can also help you develop a credit history. So when I open my credit card, make my child as an authorized user. I'm responsible for making the payments. I paid off month over month, but because of my great credit history, it lends into his credit history as well. And so now he's developing a good credit history based on the card that I have in my name. So that's also a really good way to help someone that you trust, because you're giving someone access to a credit card. You want to make sure that you trust them, that they won't go spend it and you're left with this huge bill at the end. And then the fifth way that you would bid credit is if you see that there's someone who's willing to co-sign on a loan for you. And this is something where this adult who is credit worthy, obviously most parents will do that for their children, they will co-sign the loan. You get the benefit of their good credit history. This will help you get approved. And now whoever co-signs the loan for you is taking on a really big financial responsibility, because they will be the one that would be responsible for paying off that debt should you run into trouble and not able to pay back that loan. So this is not something you want to do lightly. I will tell you that, not knowing the person or a whole lot about how that person manages money will be a big question you want to ask yourself before you yourself later on in life, as you build your credit, want to do a co-sign on a loan for. So be very cautious about that. So when I think about some do's and don'ts when it comes to credit, I think it's very important to use credit sensibly early on to help you build that financial acumen and develop habits that would boost your credit score as well and help you build that foundation. So one of those things is to pay the credit card bill on time. One missed or late payment on a credit card or a loan will lead to interest charge, late fees, but also it will lower your credit report. It's called a ding on your credit report. So don't forget to pay those bills. But also utility bills are also reported, and cell phone bills are part of what will help build your credit if you pay those on time. But it would also hurt you if you don't make those payments on time. So it's very important to keep that in mind. Pay your bills in full, because paying off your balance in full is the best way to avoid any type of recurring debt and carrying over balances. But also, if you can't, make sure you pay at least the minimum. So this way, you're not charged a late fee, but there will still be that interest as you carry it over month. Um, so let's see here. So it's like an SAT score. The higher, the better. Peter, that's a really good likeness. Yes, the SAT score. If it's better, you will definitely, if it's higher, it's definitely better, and you will command better interest rate. If you have the money to pay for something but use a credit card anyway and then pay back right after, can it help you build credit? Absolutely. As long as you make your payment on time and not miss any payment, you're building your credit month over month. Here's a secret that not a lot of people know. People think that in order to build credit, they need to have a credit card with a really, really high limit on it. Doesn't matter. As long as you use that card one time a month to buy lunch or put gas or buy a cup of coffee, your credit is based on your ability to make your payments on time or not miss a payment. So it's your payment history, not the limit history. So please keep that in mind. Um, so you also want to make sure you monitor your account and keep track of your purchases, because you don't want to go over your limit. And make sure you're reviewing your spending habits to spot opportunities where you can cut back, because you also want to make sure that you're not overspending. But keep in mind, when you get those statements or you go online and you look at your statements, go through those statements line by line, because there are chances that you can spot any type of suspicious charge that's on your account or your credit card account that you didn't do. And so you want to make sure that you file a claim to get those taken care of for you. A big thing is, don't use all your credit, because when you use all of the credit that's available on your credit line, which is your actual credit limit on your card, and you come close to your credit limit, it is likely to also hurt your credit score. So be mindful of your spending, and cash advances, if you take out those, which is getting a cash out of the limit on your card, first of all, the interest rates are so much higher on those. But it also burns through your credit availability very quickly when you do cash advances. So be mindful of that. Higher interest rate burns through your limit very fast. Applying for credit cards. You don't want to apply for too many at a time, because the more applications you do, every time it dings your credit and your credit goes down. So several inquiries happen around the same time could hurt that score, and it shows the lenders that you need a lot of credit all at once. So if you're tempted to apply for a new store card in order to get a discount for a purchase, make sure it's something you really want, because it will definitely, if you have too many open lines of credit, also hurt your credit score. You also don't want to do the opposite, which is close too many of your accounts because you aren't using them. You might be tempted to close accounts when you pay them off and you think you won't need them again. Think about that decision carefully, because one of the factors for your credit score is the length of your credit history. And often, if you have good accounts that's been open for a long time and you've handled them well, it would help you in keeping that good credit score and show a history of good credit utilization. So that's very important. So when we look at the credit card and also the how you use it, It's also helped to demonstrate to lenders that you are a good credit risk. So I want to show you the example that's on the screen here and talk about how it's used as a smart credit move. So suppose you charge $500 worth of purchases on your new card, knowing, because you've read the terms of agreement, that you will be charged 13% interest on that $500. You're not too worried because you know that the minimum payment is about $15 a month, right? But what happens when you pay only the $15? $5 of that will go towards the interest of the loan. The other $10 will go towards the principal. And so the amount, which is the amount you borrow. So after your first payment, you would still owe $490, even though you paid $15. So it would take you 3.5 years and $124 in interest to pay off that loan. That is very eye-opening for me because that tells me that if you spend $500 in clothing or whatever you use that purchase for, you you would still be wear you should be you probably would want to be wearing it for the next 3.5 years because that's how long it would take you to pay that back. So the same rule applies when you think of a larger purchase, right? So $3,000, 14% interest, you pay the minimum of $65 a month. It would take you 17 years to pay off that loan, and the interest, um, $3,000 in interest as well. So that's gonna come up to a 17-year-old computer by the time you pay that off. So let's look at it another way. If you were to able $200 a month for that same computer, and it would take you a year and a half, it would only be $317 in interest to pay off the loan. So it makes a difference how a difference in whether you decide to purchase it and if you're going to make the minimum or if you're going to be making over the minimum of how quickly you pay it and how much in interest that you will pay over the life of that loan. So as we wrap on this section, the key takeaways is obviously always knowing the pros and cons of borrowing and credit, the difference between credit reports and credit scores, and how lenders look at your credit report and your history to determine, together with your credit score, what your interest rate is going to be, and how to build good credit. And we talked about making more than the minimum. We talked about paying it off if you can. And then the do's and don'ts of credit and using it wisely. So do you really need, we go back to those needs versus wants again. What you're using, it's easy to use, pick up your credit card and swipe or insert or tap or use your digital wallet, but it's so easy to do that. And when the bill comes, it adds up really quickly. So keep that in mind as well too. So let's take a look if there's any question about, no one in my family owns a credit card. Can I still qualify for a secured card? Tanya, absolutely, you can qualify for a secured card because that is based on your history, or if it's a new history you're establishing, that's something where it more likely be the secured card where you would put that security deposit or that collateral down. So great question. And the other one is if somebody becomes bankrupt, how can they recover their credit? I love that question. So, Angeline, that one is really one where you would also look at the secured card. That's the option for you, as well as one of the things you want to do with credit, with bankruptcy, there's a time limit where that bankruptcy falls off. And so you want to also pay attention to that as well. So secured cards are a great way to come back from bad debt, from debt that has been abused over time, even no debt at all. And I'll encourage you guys that no credit is better than bad credit. So be responsible in how you manage your cell phones, your utilities, what was that, the memberships, things like that. Please keep that in mind because that could also help with your credit score. And Josh, I will pass it over to you and keep answering some of these questions through typing it if you want to keep going.
Absolutely. I saw it was 5 questions. I was unable to see the Q&A. I
Yep.
wanted to get to
Yep.
them. Couldn't get to them, but we'll move into the next session in the final section. Thank you guys so much for being with us. We really appreciate Grace for inviting us and the National Society of High School Scholars for having us. And we're coming into a close of it. And our next section and final section is going to be around financial safety. So really making sure that we are trying to keep our information as safe as we possibly can. Of course, this information, when you're dealing with money, you're dealing with banking and things of that nature, the information is extremely sensitive, right? And we live in the banking world. It's very, very important that we keep everybody's information as protected as we possibly can during this time as well. So keeping the information safe. So have you ever lost your wallet before? I know I have before. And here's a tip to minimize the impact. Don't carry personal things like social security card, passwords, birth certificates, spare keys, credit cards that you don't regularly use, or checks in your wallet. You want to keep a list somewhere of the safe credit card numbers and license, and photocopy the front and back of everything that's in your wallet, so that if you do lose your wallet, you can immediately call your bank and credit card issuers, or use mobile or online banking to be able to cancel and put an alert on each card. You may also be able to temporarily lock your misplaced debit cards via mobile banking. And you also want to contact one of the credit bureaus to place a fraud alert on your credit report if needed, and order new bank or credit cards and update that account information for any automatic payments. How do you keep your information safe online and in the real world? Of course, secure your cell phone, making sure that you have a strong password and lock your phone, making sure your personal information is not easy to find. Avoid storing personal data on, such as credit card information, social security numbers, passwords, or other sensitive information directly on your phone. I know everybody now, it's password for everything, Face ID, all of these different ways that we can log in and sign into things. But it's really important to make sure that you're not saving your passwords in all of the websites that you utilize. You're maybe keeping that information stored safely somewhere where you can reference it and then type in that password. That can be extremely helpful. You want to make sure that you're aware, pay attention to who's around you when you enter in a PIN number, right? At the gas station, at the ATM, at the store, at the point of sale. When you're presenting your card and putting your PIN number in, very, very important. You put your hand over top while you're entering it in, or shield with your body, making sure that you're keeping that information safe as well. Checking your credit report annually, very, very important. Everybody is entitled to a free credit report. In the US, I think it's annualcreditreport.com. You can head over to, and that would allow you to be able to check your credit report free, and it does not hurt your credit score at all to check. And you can watch your credit card account activity closely to make sure that there's no fraudulent transactions, things like that come up. And the earlier that you can spot suspicious activity, the easier it can be to clean it up. Being unique, take the time to create different passwords for all of your accounts. Create a system that's easy for you to remember, but difficult for others to guess. Don't use obvious usernames, like your email address or your name or your social security number. That makes things even easier to be gathered by fraudsters. Get smarter about being social, right? Sharing too many personal details on social media can give bad guys an advantage, right? Things like your location, places where you are, places where you're spending money. Information like your mom's maiden name, where you went to grammar school, or even a pet's name can help them figure out and or reset your passwords. Even your birth date is something that you should keep to yourself, because it's a key piece of information someone needs to be able to steal your identity. Also, in those geotag photos, if you're utilizing Instagram or Facebook, anything like that, putting where you are can also make it easy to find out where you live. So keeping that information personal, extremely important. And then be suspicious. If someone calls or emails you from a bank or credit card company, collection agency, government agency, anything like that, don't give them any personal information. Never give out bank account numbers with your birth date or social security number to anyone who reaches out to you. Mind your mailbox. Make sure that the thieves don't get the opportunity to steal pre-approved credit card applications that drop in your mailbox, or those blank checks that you may have. If you just simply just want to make sure that you're always checking that, right? I know sometimes you can go days without checking your mailbox, but if you can go out and get that, that'll help keep you safe as well. Shredding your trash. They're out there, right? Dumpster diving and trash picking, looking through information that may come out. So make sure that you're shredding any personal information that gets mailed to you or that you bring home. Look out for the lock. If you're shopping online, be sure that the address begins with HTTPS. A lot of addresses have just the HTTP inside, but if it has the S on the end, it tells you that the site is secure. And don't forget to look for that little lock icon in the top left corner of the browser before you enter any payment information in. You want to make sure that you're building a digital fortress around your devices. It's important to maintain any type of antivirus or anti-malware software on the computer, tablet, or smartphone. And when updates are pushed out, install them as quickly as you can, even on voice devices as well. That'll help you keeping all your information safe where you won't have to worry about it getting stolen. Secure yourself. Of course, if you're using Wi-Fi or a home computer at the library, make sure you take steps to secure your info, and then enlist help. Sign up for alerts from your bank or credit card company to notify you when there's any suspicious activity on your account as well. So, in conclusion, right, there's tons of things as we went over here today. We went through credit, we went through debt, we went through savings and budgeting, we went through retirement, some spots around retirement, preparing for college, privacy, security, and we have a whole host of different things that the bank allows us to be able to go into and have conversations about. But I would definitely have you guys go to bettermoneyhabits.com. There's so much information available there where you guys can really get yourself educated and learn more about the topics that we talked about tonight. And of course, any questions that you guys have that you want to share, you can feel free to put those in. I'm not sure if there's any questions left in the Q&A or in the chat at all. But
There's just the one that says, do you recommend using online services and sites to manage taxes and bills? Absolutely. Love online.
absolutely, absolutely. Just make sure that it's secure, like we said.
Secure site, yes.
Yep, as long as it has that S at the end of the HTTP, you should be good to go to enter in that information whenever you're putting that in. And is there any other questions or anything else left, Zarona, that you see?
No other questions that I see. Nope, that's it. I think we got all of them.
Awesome, perfect. Well, again, we appreciate you guys for spending some time with us today. Remember to utilize that bettermoneyhabits.com website if you guys have any questions. Feel free to let us know. Again, I think they're going to put in the contact information available for us there in the
Absolutely.
chat. And we'd be more than happy to help and answer any questions that you guys have.
Absolutely. And everyone, please have a great night. Be safe. Wear a mask, please. Let's get this pandemic out of the way.
Absolutely. Absolutely.
All right, guys. Great night. Thank you. Thank you, Grace.
Thank you, Grace. Have a good one.